Hey everyone, welcome back to Corporate Decoder, where we take corporate jargon and make it make sense. Today we are diving into AutoZone's latest proxy statement, and let me tell you there are some interesting moves behind the curtains in this automotive giant. Buckle up because we are going to decode what this all means for you as a shareholder. And hey, if you love getting straight answers from these dense filings, make sure you are subscribed and join our Discord community, linked in the description below. We have a lot of fun breaking down these reports together. AutoZone is a major player in the automotive parts and accessories market, and this document is essentially their annual report to shareholders laying out all the important decisions and information they want you to know before you vote. We start with a letter from Bill Rhodes, the executive chairman. He talks about some big leadership changes over the past year. Phil Daniel is now the CEO, a role he officially took on in January of this year. This is a big deal because it is the first time in nearly 2 decades that the CEO and chairman roles are split. Rhodes is stepping down as executive chairman and will become chairman in January 2026. This all sounds like a carefully planned succession, which is good for stability. Then we get to the notice of the shareholder meeting. It is set for the 17th of December 2025 at their headquarters in Memphis. The key things on the agenda are electing directors, approving their accounting firm, and an advisory vote on executive pay, 3 standard but important items. The proxy summary gives us a quick look at what is to come. Financially, for fiscal year 2025, they brought in $18.9 billion in revenue with earnings, per S-Hair of $144.87. They also repurchased $1.5 billion of their own stock. That is a lot of money coming back to shareholders. They have over 7,600 stores globally, which is a massive operation. Let's focus on those numbers for a second. FY25 financial and operational highlights show $18.9 billion in revenue and $144.87 diluted earnings per share. That means for every share of AutoZone stock out there, the company earned over $1944 this past year. That is an impressive profit margin, especially considering the competitive nature of their business. They also completed $1.5 billion in share repurchases. Buying back stock can be a good sign. It often means the company thinks its stock is a good investment. It can also boost earnings per S-Hair because there are fewer shares outstanding. Moving into corporate governance, they emphasize their board leadership structure with an executive chairman and a lead independent director, which is a solid setup for oversight. They also highlight intentional board refreshment, meaning they are actively bringing in new directors to bring in new ideas and skills. This part lists the director nominees up for election. You see names like Philip B. Daniel III, the president and CEO, and William C. Rhodes III, the executive chairman. What is interesting here is the independent column. Most directors are independent, meaning they don't have a direct financial tie to the company beyond their board service. This is crucial for unbiased decision making. The board skills section breaks down what expertise each director brings. They have a lot of talent in leadership, financial literacy, and strategy. It is good to see they have people with strong retail and consumer experience, which is obviously key for AutoZone. They also have quite a few directors with technology experience, which is vital in today's business world. Notice that 11 out of 11 directors have leadership, financial literacy, and strategy skills, showing a well-rounded board. Looking at board composition, 9 out of 11 directors are independent, which is a strong number. They also show a good mix of ages and tenures, with a decent number of independent directors having served for 0 to 5 years, suggesting a focus on refreshment as well as retaining experienced members. Now let's get to something everyone is always interested in: executive compensation. The compensation discussion and analysis section explains how they pay their top executives. Their philosophy is built around 3 guiding principles: drive performance, drive retention, and drive shareholder value. The FY25 year in review paints a picture of a strong year focused on growth. They opened 304 new stores and invested heavily in their systems and supply chains. This aggressive expansion shows they are confident about the future. Their compensation framework is pretty straightforward. Base salary is the fixed part. Then there is the annual incentive plan, which is tied to short-term goals like EBIT and ROIC. Long-term incentive plans, mainly stock options, are there to align executive interests with shareholders over the long haul. The target compensation mix chart shows that a large chunk of executive pay is variable or at risks, meaning it depends on the company's performance. This is a good sign because it means executives only get paid well if the company does well. This is where we see the actual numbers for fiscal year 2025. The former CEO, William C. Rhodes III, had his compensation listed. As executive chairman in 2025, his total compensation was $25,79419. His salary was $150,000, but the vast majority came from stock awards. The current CEO, Philip B. Daniel III, had a total compensation of $9636414. His salary was $1 million with a significant portion from stock and option awards. It is interesting to see the difference in compensation when moving roles, with Rhodes' compensation as executive chairman being significantly lower than his previous CEO compensation reported in 2023. The grants of plan based awards table shows what they were awarded for the year. For example, Philip B. Daniel III was granted stock options with an exercise price of $3,129.78. When you see these numbers, remember they are based on potential future value, not necessarily what the executive pocketed. The outstanding equity awards table gives us a look at their unvested stock options and awards. This shows the value they hold that is tied to the company's future performance. For example, Philip B. Daniel III has a large number of stock options with various exercise prices and expiration dates, showing a significant long-term stake in the company. This table shows what they actually exercised or vested during the year. William C. Rhodes III, for example, exercised options that resulted in a realized value of over $134 million. That is a massive payout reflecting the significant stock appreciation over time. Now for a really interesting stat, the pay ratio disclosure. It shows the ratio between the CEO's pay and the median employee's pay. For fiscal year 2025, the CEO's total compensation was $9636414, while the median employee's total compensation was $29,017. That makes the CEO to median employee pay ratio 3:31 to 1. This is a pretty high ratio, which is common in large corporations, but it does highlight the significant pay gap between top executives and the average worker. In the share ownership information section, we see that directors and executive officers own a good chunk of AutoZone stock. This generally means they have a vested interest in the company's success. For example, William C. Rhodes III has over 90,000 shares and stock units. Looking at major shareholders, Vanguard Group Inc. owns over 1.7 million shares, making up more than 10% of the company. BlackRock Inc. also holds over 1.2 million shares. These large institutional investors often have significant influence. Finally, the general information section covers voting procedures and upcoming meetings. It is pretty standard stuff explaining how to vote and what to expect. So, what is my take on all of this? AutoZone seems to be in a strong position. They are expanding aggressively, have a solid leadership team in place with a clear succession plan, and their executive compensation is heavily tied to performance, which is what shareholders want to see. The pay ratio is high, as expected, but that doesn't necessarily mean it is a bad thing if the company is performing well and returning value to shareholders. The company's strategic expansion combined with significant share buybacks suggests a confident outlook. However, the reliance on stock options as a primary long-term incentive, while traditional, might lack the performance linkage of more modern equity plans. Overall, AutoZone appears healthy and focused on growth and shareholder value. What are your thoughts on the leadership changes and executive compensation at AutoZone? Let me know in the comments below. If you found this breakdown helpful, please hit that like button, it really helps the channel, and subscribe for more corporate deep dives. Don't forget to join our Discord community linked in the description. We're always discussing these filings and more. Thanks for watching, see you next time.